Hey everybody, welcome to this day trade recap. It is November 16th. We worked with a couple of stocks today, and I apologize. It has been, I don't know, maybe a month since I have done a recap video. And that's for a good reason. I'm not trying to encourage anyone really to get in the market just yet. The reason for that is this bear market has been really very challenging. I've been in the market for quite a few years, and I've seen a lot of pullbacks, bear markets, bull markets, whatever. I've seen it all. But this is the first time that I have really seen tremendous fear in just day trades. For those of you who work with me in my trade plan room, you've become familiar with my targets, right? And you know that my targets are incredibly accurate. I mean, they really are. They're flawless to the penny generally, but as you've seen for the past month or so, price is not always reaching the target, whereas normally we reach the target no problem at all. In this case, we're just not seeing that. Traders in general are being incredibly cautious. So for that reason, I really have been hesitant to put out any of these trade recap videos because I'm not trying to encourage anyone to get in. It's a great time to learn. You're going to learn stuff that you could never learn otherwise. This is a very unique market, but I really feel like we're scavenging for roadkill here. I'm not kidding you. I just feel like, yeah, we're kind of picking through the crap on the side of the road, and whatever we can get, we're just going to be really careful with. But anyway, let me get into the stocks that we traded today. We traded SOXS and INM. Okay, today this was the only stock that was moving in pre-market. So you do what you got to do. You pick up the roadkill. Anyway, so I put out a trade plan for this one at 7:04 my time this morning, right around here. And I actually did get in at 7:11 this morning. My entry price was $33.59, $33.59. I saw this 5-minute level right here at 34.70. And I told the students, the mentor clients, the trade plan room that, hey, watch out for this level. They know when I say watch out for this level, they know that if they have to, they'll take profits here and then wait and see if it sets up again. So that's exactly what I did. I want to point out though, when you trade, you have to make sure your entry makes sense. In other words, you got to know before you click your buy button, you need to know your stop loss. So let me point this out to you. My stop loss in this case was this tail. You see this tail right here? Right here. The previous candle, my entry was right here. My entry was, what was it, 33.59. So I went to this tail, this long tail, and that was going to be my stop. In other words, if a candle closes below this level, then I will sell at a loss. Otherwise, I'll stay with the trade to my target, and that's exactly what I did. Let me talk about that. In this case, my entry at $33.59 with a target of $34.70. That is a reward of $1.11, okay? My risk was only 18 cents. So what I shoot for is a 2-to-1 ratio. In other words, I want double my reward from my risk, okay? My risk was only 18 cents. I'm getting $1.11 just going to here. So that made perfect sense, right? So you always want to weigh your risk to reward. You need a minimum, an absolute bare minimum of a 2-to-1 ratio, okay? If it's not a 2-to-1 ratio, don't even get in, okay? Don't even trade it. Ideally, I want much greater than a 2-to-1. This one made sense, so I got in right there on that candle, took it to here, and then I could have held, right? The 50 EMA, that's this dark blue line, dashed line, it was still pointing up. The 200 was still pointing up, but we had some resistance here that I wanted to prove this level, and here we had it proving. Let's just zoom out. So I wanted to prove this level, and it continued. It came down almost to it here, so I could have stayed in. But I didn't. I worked with a different stock at that point, but I did come back to it here on this candle. I traded it again at 10:50 my time. And again, let me look at the risk to reward, because that's what I want to focus on in this video with you, is the risk to reward. You don't trade unless you have at least a 2-to-1 risk to reward ratio, okay? So my entry on this one, 10:50 this morning, my time, which is mountain time, 10:50 was my entry right here. My risk was going to be the long tail from that sell-off, right? I go to the sell-off and I look to the long tail right here. So my risk on that one was 19 cents. My stop loss was 35.05. So I had a 19-cent risk with a $1.41 reward all the way up to this. And I did reach that. It took a long, long time. Let me zoom out so you can really see. Okay, here's the entry. And I actually was a little below this line, 36 65 was my target right here, and it did hit that. The next target I have on here is 37.98. See, it's a little below my white line. Anyway, you can see we're kind of selling off, and it's probably going to need to come down to the 200, maybe even the VWAP. It's been a while since it's been to the VWAP. But anyway, that's what I did with SOXX. So I had one trade. My first trade on it was $1.11 profit per share, and the second trade was $1.41 per share profit. Okay, the other stock that I traded was INM. And I posted this trade plan in the trade plan room at 7:41. Didn't really like it. It's a pharma stock, and they tend to be money hungry. They don't always play out as nicely as you want. It's a lower float. The news was mediocre at best. So I was going to be careful, but I thought I would make my target right here. But anyway, it had made this climb and it started to pull back a little. And I thought, well, I'm going to look for a dip buy and hopefully it'll push up this level right here. So I got in at 7:50 my time. My entry price was $3.93. And the reason I chose this candle, I had a long tail that gave me a stop level, right? You need that to identify your stop loss. So this one, and then we had a confirmation one right here, this little doji. So I knew my stop loss was going to be $3.72, $3.74, somewhere in there. And my target was going to be $4.86. So that was clearly much greater than a 2-to-1 ratio. So I was good with that. I was going to stick with the stop loss. That meant if price closed below $3.72 or $3.73, I would exit at a loss. Otherwise, I stay in until I get to my target. Well, this was a messy trade because it went up and then it didn't hit the target. Like I said, we're seeing a lot of that lately. And I got to tell you what, my targets are dead on. Talk to any of my trading plan room members and they'll tell you, yeah, she's really good with her targets to the penny most of the time. But lately we're not reaching them. So we have to use some common sense. And I actually sold right here because it started to make these lower lows. So I sold when it came back through the VWAP. I thought, you know what, it's making lower highs and lower lows. That's not a good place to be in. I should have sold back here, but I actually was okay. I sold $4.41. So remember, I got in at $3.93, sold at $4.41 for a 48-cent per share gain, which isn't bad, especially considering it was just making lower highs and lower lows. It was on a downtrend and I was being very stubborn and I didn't get out when I should have. I was just so convinced that it was going to come up here, but it didn't. So when it started to show a downtrend, a clear downtrend, I just decided, okay, I'm going to get out, and I got out here. I did well, all things considered. And then it started to do this wedge pattern, and it wasn't even a good wedge pattern. This is a 1-minute chart. Kind of failed right here. Whenever it breaks below the bottom line of the wedge, I knew it was going to probably come down to this 200. And it held the 200. It retested this level, which if you find a higher low, like right here, you could get in on this one, the first higher low and a signal, get in there and know that it's going to try to come back up to this area. And you could have traded that for getting in, getting in like $4.24, getting it to $4.60 maybe, or 65 cents. But I didn't like it, so I didn't take it, and I got busy. I went back over to SOXS at that point and was trading that. Anyway, for those of you who don't want to get chopped out on your trades, just first of all, don't get in a trade unless it's at least a 2-to-1 risk to reward ratio. Okay, this one was right. It wasn't the best of a trade because we didn't meet our target, but at least I was buying the dip. So you find the dip right here. And how did I find the dip? Well, I found my tail, right? You got to have a long tail, and then you got to start to see a little bit of pushing up. Okay, here it was doing that. We had this relatively good candle here, but then it kind of popped back down to that level. It didn't breach the level. So when I had this sign of strength on this one, that's why I got in there, knowing that I only had like an 18-cent risk and I was going to go for this. So that one made sense. I was in the green the whole time. It just was slow. I didn't like the price action. I should have sold much sooner, but that's okay. You will not get chopped out ever if you know your risk to reward and you have that in place before you even click the buy button. So getting in here, and here we had a support level. This line, this is a daily line, right? And my price was above that when I entered. So that made sense to me. And I had this cautionary that I told the trade plan room at 34.70 just to watch for. I could have stayed with it to this line. It did eventually make that line. That would have been a very long trade. Again, my risk to reward on this one, I looked to the left to find my long tail. So we had this sell down, and it wasn't a really long tail. It started to push up So that's why I got in on this one. And once you have sign of strength, you can take it to your target as long as you know your risk, right? This was a tiny risk for me, tiny, 18, 19 cents with over $1 per share gain reward. It just totally makes sense, okay? And as you can see, this one just continued to push up all day. Right now it's coming back down to the 200. In this bear market, there is nothing more important than understanding your risk and your reward. Does the trade make sense? If it doesn't make sense, don't trade it. Don't chase. This thing was going up, right? If you got in here, does it even make sense to get in when your top is going to be right here, if you make it there? So buying here doesn't even make sense. Let's zoom in and look at that. So it was going up. And you're thinking, oh, it's going to make it here. Well, what is your risk? If you were to get in on one of these candles, say you were to get in on this one or even this one, do you know what your risk is? Say you got in on here. Here's your risk right here. $4.25. If you have a candle that closes below that, you got to get out of that trade. But did that even make sense? If you were getting in at the top of that candle at 447 and your risk is 425, does it make sense? Is that a 2-to-1 ratio? Your risk is 20 cents. Are you going to make 40 cents if you get in at $4.50? Are you going to make 40 cents? You're not. So that's not even a 2-to-1 ratio right there. And it's kind of a hard calculation because you're really having to do the math in your head. It's not a real obvious trade. And this one, it didn't even make that target. So, if you're not buying a dip on a stock like this, like back here would have been the logical entry, a dip buy. But if you're not buying a dip, if you're chasing, you don't even have a buy signal here. You're chasing at that point. Now here we have a buy signal, right? Right here we have a buy signal. You'd be getting in at $4, probably $4.60. What's your risk? $4 and you don't even have a long tail. I prefer to see a long tail, right? But we have a flat bottom. $4.35. So you're getting in at 460. So it's like a 30-cent risk to a 20-cent reward. Doesn't even make sense. Okay. So this signal does not make sense. This signal absolutely does not make sense. So you need to understand, what am I looking at here? Here's my target, which it didn't even make. But what am I looking at here? When I see these signals, does it make sense to get in there? Do I have a 2-to-1 ratio? No. So don't get in here. Don't chase. When I say don't chase, that's what I'm talking about. Does the risk to reward make sense? And then of course you can look at these other indicators here. I mean, what's happening here? We have a downtrend on this thing. So you can use the other indicators to make a judgment call, but really the primary thing is know your stop loss before you even click buy. Know your target, know your stop, and know your price that you're buying at. Okay, it needs to make sense. All right, well, that's all I had for you in this video. Like I say, I will make more videos of these risk to rewards type setups if they make sense, so that you can get a better understanding of deciding, does a trade make sense? Okay. All right, I hope this was helpful to you. If this was helpful to you, go ahead and click the like button, share it with other people that may find benefit in this video. And I hope this was helpful. If you have any questions, let me know and we will talk soon.